Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. Every Saturday, I take a look at what has been happening in the metals market this week, and this week we have a pretty interesting story from China, the World Gold Council, and even from my own experience at the coin shop. Sometimes looking at people's reactions can tell you just as much as the price movement itself, and what I think is interesting is that they both point towards the same idea. Physical precious metals will continue to matter. So let's take a look at what happened this week. Congratulations to South Haven Coins and Bullions for being the first to comment on my last video. It truly does help the YouTube algorithm that all of you are racing to be the first comment. So again, thank you for your support. Let's jump right into the numbers. Gold closed at $4,052.84, which is a gain of 0.88%. Silver had a pretty good week, closing at $58.20, a gain of 4.11%. Platinum slipped slightly, closing at $1,582, which is down 0.18%. Palladium also finished slightly lower at $1,229, down 0.24%, and copper closed at $6.38, which is up 1.27% from last week's close. So if we're just looking at the scoreboard, we could say that silver is the clear winner this week. Gold had a respectable gain. Copper continued to show its strength, while platinum and palladium were basically unchanged. But I think the real story wasn't really the price action this week, it's what came from China. One of the biggest stories this week was that several of China's largest banks announced that they were ending the retail paper gold trading. And I'm sure people have already been seeing this all over social media, and it's being twisted, almost sounding like China is banning gold or they're shutting down the Shanghai Gold Exchange, but that is not the case. China did not ban gold, and they definitely did not shut down the Shanghai Gold Exchange. They didn't stop institutional trading. And they certainly didn't tell people to stop owning gold. Instead, several major banks discontinued the retail paper gold products, meaning everyday investors can no longer use those banking products to gain paper exposure to gold through those programs. The official explanation is risk management. They say that gold has experienced too much volatility this year, and Chinese regulators are saying that they've been trying to reduce speculative trading specifically with these products. And that explanation does make sense, but here's what caught my attention. The story becomes much more interesting when you combine it with something that the World Gold Council reported just a couple weeks ago. According to that report, Chinese central banks have purchased another 15 tons of gold in June alone. That makes 20 consecutive months of increased buying of gold reserves through China. If we think about that, it's 20 straight months of increased buying, not just 20 months of buying gold, but the amount that they are buying is growing each month. Now, I'm not suggesting that these two events are directly connected. We don't have evidence for that, and I think it's important to be careful about drawing conclusions that aren't supported directly by the facts. But I do think that they point in the same direction. On one hand, China continues adding physical gold to its national reserves. On the other hand, several of its largest banks are reducing access to retail paper products. As someone who believes in owning physical precious metals, I think that it's worth paying attention to. For years, I've talked about the difference between owning a promise and owning the metal itself. A paper contract and an actual 1-ounce gold coin are not the same thing. They both have a place depending on your goal, but they are very different. And this week's news reminded me of that distinction. But now let's take it back to the charts. If you look at the 5-day charts this week, you'll probably notice something interesting. Early in the week, all of the precious metals were looking strong. Gold was climbing, silver was climbing, platinum was climbing, and palladium was climbing. Then, around the middle of the week, they all rolled over. Gold and silver eventually recovered part of those losses before the end of the week, while platinum and palladium mostly leveled off. To me, that wasn't a change in the long-term fundamentals. It was traders reacting to short-term expectations surrounding inflation, interest rates, and next week's Federal Reserve meeting. That's something I try to remind myself all the time. Prices can move dramatically in a few days, but fundamentals usually don't. What I find really interesting about this week is actually what I saw at the coin shop that I work at. If y'all don't know, I currently work at a coin shop as an employee, and I'm working on building my own coin shop that will most likely be opening here in about a month or two. A large portion of my channel is talking about what I see coming in and out of the coin shop, as well as my relationship with the wholesalers and how that can influence premiums and things like that when it comes to physical precious metals. But this week, what I saw was that when gold approached $4,100 and silver touched $60, we saw a noticeable increase in people coming in to sell. It was not a huge wave, but it was definitely a few more people than we have had the past couple weeks. It was definitely enough that you can tell that people had been waiting for those price levels. Then something else happened. The market pulled back, and almost immediately we saw buyers coming into the shop right afterwards. Again, it wasn't a buying frenzy, but there was definitely a shift. That tells me something. Right now, buyers and sellers seem to be waiting for volatility. Sellers are watching for rallies, and buyers are watching for dips. Nobody appears to be panicking. They're simply just waiting for better opportunities. And honestly, I think that's a pretty healthy market. People aren't making emotional decisions. They're making price-driven decisions. As a dealer, that's one of the most fascinating parts of the business. Charts tell what prices did, and customers tell what people did. Sometimes those are the same story, and sometimes they're completely different. I think you learn a lot by paying attention to both. So what does this mean for stackers? Personally, nothing this week changed why I own precious metals. Central banks are still buying, countries are still diversifying their reserves, the world still needs silver for electronics, solar panels, and advanced technology, copper is still benefiting from long-term electrification and infrastructure investments. None of the long-term stories have changed this week. What changed was sentiment. Sentiment changes much faster than the fundamentals, and that's one of the biggest mistakes I see new stackers make. They let the short-term price movements convince them that the long-term story has changed. Most of the time, it hasn't. I think one of the best examples is what happened in my shop this week. Some people looked at higher prices and decided it was finally time to sell. Others looked at a pullback and decided it was finally time to buy. Neither group is necessarily wrong, they simply had different goals. And that's why I encourage people to have a plan before emotions get involved. Know why you own the precious metals. Know when you'll buy and when you'll sell. Don't make those decisions in the heat of the moment. Make them ahead of time. So as we head into next week, here's what I'll be watching. Of course, everyone will be paying attention to the Federal Reserve. I'll also be watching whether China's actions continue to point towards greater emphasis on physical ownership rather than paper exposure. And finally, I'll be watching what happens right here in the shop. Do buyers stay patient? Do sellers come back to sell if the gold challenges 4,100 again? We will find out together. So if you like this video, please give it a thumbs up. Go down into the comment section to start a conversation or continue one. Subscribe if you haven't already, and share the video with someone you think may like it. To my long-term subscribers, thank you so much for your continual support, and make sure you go to josephsreserves.com to check out my merchandise, zip-up bags, coffee mugs, and It's Today Again coffee. But most of all, thank you so much for watching, and just remember, every ounce adds up, so no matter how small, just keep stacking.